Alright, so your professor just put your entire business class or econ class or whatever class into a market game, and you, being the absolute chad you are, want to make crazy returns. And even though it's paper money, it's not real, you still want to make returns that your teacher's never seen before. Well, if that's what you want, you came to the right place. Okay, so right now on the screen you can see a screenshot from the game I played a while ago. And as you can see, I made 2.4 million in total returns on a $100,000 profile. And just comparing this to the rest of the class, no one came close. Second place was 81,000, which was nowhere near what I got. And again, this is another screenshot. Here on the bottom, you can see that the profile was all liquidated. If I was still in a position, it'd be like red or green, but now it just means that everything I sold, it's all liquidated, and the cash is fully in the account. Now that being said, let's get on to the strategy and let me teach you guys how to actually get those returns. And by the way, this is not financial advice and simply how I just made a large amount on demo money, which is not real money. Okay, so this strategy actually revolves around the equity open, so 9:30 Eastern Standard Time. And basically what you're going to be doing is going on FinViz and camping the equity open and just seeing what type of stocks pop up on their homepage. FinViz is just finviz.com, it's free and anyone can access it. Now, since this is based on equity open, if you don't live on the East Coast, you need to convert 9:30 Eastern Time to whatever time zone you're living in. So for example, if you're living in Europe, the equity open would be around noon. I think it's like 1:30 p.m. And if you're living on the West Coast, like in California or something, it's 6:30 in the morning, so you have to wake up early. So what you're trying to look for here is just anything cheap, right? All of the stocks that pull up here have massive change in volume, so that means a lot of volatility, and you're just looking for something cheap that you can take advantage of. So this one, FCUV, you might not be able to do because on some games there's a $2 minimum requirement, and this is under $2. NITO would be good. And then this one, the $19 one, that's just too expensive and you don't want to really touch that. So basically anything between $2 and $5. So let's say you found NITO. I'm gonna go on TradingView, and this is a free stock like chart software, whatever thing, and you can just download it or use the web version. And you search up a stock, and basically what you're looking for is penny stocks that have an overall downtrend. And then the reason why you're looking at equity is at equity they might spike up a little bit, and then that's when you're going to be going short, trying to sell it and riding it down. So in this chart we can kind of see that it does have an overall downtrend, but during these past days it's been going up a lot, and I might not be comfortable actually trading this. So this could be on your watch list, but for now let's keep looking. Another one that's good is this one, ATHE. So let's check it out. This one's pretty good, right? We have a lot of volatility, and on a 4-hour chart it is going on a very, very big downtrend. But if we look at this area, you can see from November of last year, for the past month it has been going up, and because of that you might not actually want to trade this one. Now let's look at this one, NITO. This one seems really good because again we have a overlying downtrend, and all it did was just spike up a few days ago, last Thursday. And so when equity opens, you could be comfortable shorting this, riding it for like around 20 to 30 cents because it is very cheap. At $2.33, 20 and 30 cents is gonna do a lot of damage to your account, whether good or bad. So you're shorting this stock with maximum leverage. So when you start, you have a $100,000 account, and then the game gives you 2x leverage. So you're using that full $200,000 to short this, and this is possible because there's no margin call. The 2x leverage you're given by MarketWatch is simply just basically free money. There's no downside to it, and also there's no spread. So that full $200,000 will be entered exactly at $2.23, and which is one of the which is another reason why this strategy is possible. So yeah, basically, when equity comes, you kind of want it to spike up a little bit more, and then right at 9:30 or maybe at 10 o'clock, you can go for shorts, dump your position, and expect it to fall down 20 to 30 cents. Now, in the contrary, if it doesn't do that, you enter here, and it keeps going up, just keep holding, okay? Just keep holding for like a few days to a week. You have to trust that the overlying bias for the stock is to fall, and this is simply just a little retracement, and it'll keep going lower. And that's basically it. You just repeat this process until you have the amount of money you want, until you have the returns you're satisfied with, and then liquidate your position, and then you're chilling. Anyways, that's it for me today, and I hope you guys found something insightful.